Thank you for joining us for another episode of Venture. Today I'll be sitting down with Dustin Devan, the CEO and co-founder of BuildingConnected. In addition, I sat down with Jesse Devitte, the co-founder and managing director of Borealis Ventures, and we talked about what it's like to be an investor in the AEC industry. But first, let's take a look at some of the stories going on within the venture world right now. Founded in 2010, Daiquiri has impressed the industry with its idea of a helmet designed for construction workers and infused with augmented reality. In late October of this year, Bloomberg reported that the augmented reality company is seeking $200 million to finally develop its long-awaited headset for the industrial worker. Shortly after having them in our studio, our friends at Iris VR announced raising $8 million in Series A funding. They plan to expand their technology in design and construction, as well as fully release their beta products by the end of 2016. Austin-based drone technology company Hanger raised $6.5 million in a round led by Lux Capital. A partner at Lux said that the company is more than just a drones as a service company, as it's really focusing in analysis and automation of data acquisition. In mid-October, Australian company Safety Culture announced raising $23 million USD in Series B funding. The software benefits a variety of industries, including construction, providing solutions that will make work environments safer. The multi-billion-dollar company Roper Technologies acquired Construct Connect for $632 million. With Oracle buying Textura for $663 million earlier this year, the contact industry is starting to get an idea of what their products could really be worth. And now I'd like to welcome our guest, Dustin Devan, the co-founder and CEO of BuildingConnected. Dustin, it's a pleasure having you on the show. Do you mind just telling us a little about yourself and your company?
Sure, it's a pleasure to be here. So I'm the CEO and founder of a company called BuildingConnected. BuildingConnected provides pre-construction software to about 1,000 general contractors and owners. Basically, we help them manage pre-qualifying their vendors, sending invitations to bid, analyzing proposals, and we provide them data and analytics into their organization. Prior to starting to BuildingConnected, I spent 6 years in commercial construction. So I was a general contractor. I started my career at Bechtel. Then I worked for a company called Rudolph and Sludden, which is owned by Tudor Perini, so a very large publicly traded company. And then I spent 1 year with a company called XL Construction out of Milpitas. While living in Palo Alto, in the tech capital of the world, I got the idea for BuildingConnected. I want to improve the way the industry communicated. I didn't think at the time that any other software company was addressing some fundamental issues. And so with BuildingConnected, we do a couple things very differently than our competitors or really any other software out there. The number one thing that we do that other companies do not is that most people sell you software and you maintain a contact database of everyone you're going to communicate with. So in construction, that's a lot of companies. General contractors work with thousands, sometimes tens of thousands of subs. And what happens is, over time, data degradates. People move from one company to another. On BuildingConnected, there is no contact database. Everyone is active on a network. So you can think of it like LinkedIn for construction. And that network allows us to crowdsource data upkeep across all of our users. It allows you to find new relationships. And so that's much more ideal for pre-con, where you're constantly going out to the market, trying to find new people. You get pulled to a new location. You need to tap into a new subcontractor pool. So that's who we are and what we do.
Well, I know the last announced round of funding that you guys had was November of 2015. So I'm curious what you guys have done with those funds.
Yes. So we announced in November of 2015 that we had raised $8.5 million. We actually raised that money in March of 2015. We were a little secretive. At the time, we were 10 people. We're now 35, and we're continuing to add technical and salespeople to our organization. In addition to that announcement, I have a great announcement today. We actually have closed on $7 million in additional financing.
That is awesome.
Yes. This closed last month. Thank you.
Congratulations.
Thank you.
You're welcome.
Yeah. So
Heard first here at Built World.
first here at Built Worlds. We're going to do a press release next week, but feel free. I'm glad I got to say it here first.
Yeah, that's awesome. When you say strategic investor, what specifically do you mean by that?
They are affiliated with a very large general contracting company, and they do large developments across the country.
So what are your plans to do with the new funds that you guys just raised? Yeah.
So in January of 2015, we actually set a goal to have 1,000 companies using us to manage the bidding process by the end of this year. And I'm proud to say that we'll probably have more like 1,100. So a lot of growth, We started 2015 with like 100 builders using us. So fantastic growth. We want to continue that. We want to be in every major market in America and Canada. We want to have over 2,000 builders using us by the end of next year. But we also want to reinvest that capital in providing technology solutions, not just to our general contractors, but to the subcontractors. And it's going to help us in a number of ways. It's going to drive revenue. It's going to drive adoption of our product. We have subcontractors every day that are now demanding their GCs use us.
So October 31st, Roper Technologies announced that they acquired ConstructConnect.
Right.
And of course, they have BidClerk, I believe, they had just...
High Square Foot, they have BidClerk.
Yes. And that I think just happened like in May of earlier this year, which to me, I don't know, personally, I could just be wrong on this, but to me that seems like a very fast turnaround. They acquired those companies and now all of a sudden Roper Technologies is acquiring Connected Construct. I'm curious what that means for you.
Overall, I think this is a fantastic win for construction in general. I truly believe anything that I Square Foot has done and ConstructConnect has done, we can do at scale, more efficiently, better, and I think we have more optionality to our business.
Well, another question I'm curious is about the investors that you had, those initial investors that you said, I guess, continued to invest because they were happy with what you're doing. When the process of like choosing them, did you really get to choose based on like their experience, or at the time was it just kind of more of, it's great just receiving these funds and we'll take whatever experience you have?
It started with the seed round. I wrote a gentleman named Hunter Walk a cold email in October of 2013. We were just launching with our first general contractor. And I said, Hunter, this is what we're going to do. I love your blog. Look, I'm going to get a bunch of general contractors. They're going to start using our software. We're going to build a network for all of construction. And let me start off by getting 10, and then I'm going to come approach you when I have 10. And he wrote me back. He's like, that's great. No one ever tells me what they're going to do. Everyone just wants to raise money right away. And so I wrote him back in February of the next year, or January of the next year. I was like, hey, we did this. He's like, you were the first entrepreneur to ever do anything like this. Come on in. And then he brought in some other amazing investors. And then through networking, we met Darren Bechtel. So it's always great to have an investor with last name Bechtel, especially if you're trying to do construction software. When you are seeking venture capital money, a lot of times you don't have optionality. In those cases, it's still really important to do reference checks, because there are some investors who can actually be negative to your organization. And taking money is a big commitment. You're going to be married to these people for the next 10 years, minimum. And so you want to make sure that you can work with them. And that can be a really tough thing to say no to. We've been very lucky that our investors have been insanely supportive. Crosslink Capital did our Series A. They continued to support us in this inside round. And so you have to do your homework. Don't take money from people that are going to be negative. At the same time, it can be really tough for entrepreneurs out there, so I sympathize with anyone who's in a difficult situation. Your main job as a CEO is to keep your business up and running.
Other than, obviously, what you had just said, to do your background, do your checks, what would one thing be, one piece of advice be that you would give people trying to start up a company within the construction industry, or a software company, technology company?
Well, here are the common things that I hear people ask me. It's like, well, how do I meet investors? Because I don't know anyone. I didn't know anyone when I started out. I was brand new to Palo Alto. Here's a really good trick if you want to meet investors and tell them your story. build a deck. If you don't know what a deck is, it's like a glorified business plan that you can go through with slideshows, very visual. Build a deck and start going to coffee shops. If you go to coffee shops up and down San Francisco and just start talking to people, you will undoubtedly run into people in venture capital. Just ask them, hey, can I randomly pitch you? It'll be a great way to build your network. And it worked for me very well. Investors want to invest in people that have bet on themselves. So it's very difficult sometimes. A lot of people say, I want to do this company, but I need capital before I can quit my job. An investor wants to bet on someone that's already bet on themselves, so you need to show the initiative. So initiative is really a big deal.
I cannot tell you how much I've enjoyed having you on this show, and it's been a great learning experience for sure. And thank you so much for announcing your big announcement.
It worked out. The timing was perfect, so it made sense.
Timing is everything, right?
It is. It really is.
Well, thank you again so much, and thank you guys. We will be right back, but if you want to learn more about Dustin Devan, you can go to their website, BuildingConnected's website at www.buildingconnected.com. We'll be right back. Welcome back to Venture. Right now I'm sitting down with Jesse Devitte, the co-founder of Borealis Ventures. And who better to talk about themselves than Jesse himself? So Jesse, I'm going to turn it over to you. Can you just tell me a little bit, about yourself and also your background?
Sure, I was really lucky to be part of a small group of people, startup, in the 80s and 90s back in the Boston area. We created a company called Sofdesk, which was the first company to put a lot of software on top of AutoCAD to flavor it for certain industries like architecture, engineering, structural design, things like that. So that company became a public company, was eventually acquired by Autodesk to begin what today we know as the Autodesk AEC group.
All right, and Autodesk AEC, I mean, that's, I think we know about that company, right?
It still is the driver of the industry, that's for sure, although, this whole world of startups is also very exciting, and it's something they have to keep an eye on, and customers have many needs, so they need a large suppliers, they need a lot of smaller, more active startups too.
What are the areas that your firm focuses in?
So really out of Dartmouth College in that community, we do a lot of healthcare, biotech, and life science investing. My co-founder Phil Furneaux does that. We have a partner, Matt Reitmeyer, who was part of the early team at Yahoo, and Matt works with Phil and myself, and I do more of our design and engineering, software investing. And so we have these sort of very compatible and very sort of complementary from a cyclical standpoint, venture capital, investment funds and businesses that we run.
So why specifically design and engineering software? I know you had said what people had called you, but is there also like a need for it right now?
Well, actually it's an area that's been really undercapitalized and underinvested in because a lot of the traditional venture capitalists don't understand the industry or what the buying trends are like and who the customers are. They may not understand the size and scale of it or how people pay for things or how AEC projects are run. So when people I knew from a company called SketchUp called me and they said, hey, we need some help. And I went out there and spent time with them and decided to write a check into them. Since then, we've been very involved in designing and engineering software. So it was partly accidental, but partly is based on need.
So you had mentioned it is different. Like most people don't know how payments work within the AEC industry, how things are different. How is kind of the environment different within AEC that makes it more difficult than entering into a different industry, let's say?
So it's a project-driven industry, and it's these situational teams that come together. So on a large building, for example, you could have 10, 20, 30 different design engineering firms, consultants, different construction firms, different specialty contractors, and thousands of drawings. And these people come together, they collaborate, they execute the design and construction of the building, and then they go in different directions. So it's sort of a situational, temporary, project-driven business, which makes it very difficult to implement technology and get the payback from it if you're one of those firms. If you're in a manufacturing business, Ford Motor Company can buy software. They know they're going to build these cars, and it's very, very specific how they run the supply chain. So AEC has that challenge within it, which can be overcome, by the way. It just takes some experience and some clever go-to-market positioning and some other things, I think, that can make it work.
Which is where you guys come in and help.
Hopefully.
Yeah, where your knowledge helps.
Through a lot of lessons learned, I would say.
Right. Something else that you had mentioned in the previous question was, there's probably a lot of technologies out there that are just probably hard to finding their way to the surface. You being focused in that area, How do you find those? How do you find those companies? Are you constantly keeping an eye out? Do you need to constantly keep an eye out for those kind of things?
Very much. I mean, there's obviously a lot of people that will find their way to us just by reputation from other investments we've made. People can see who the investors are. But also, I would say I focus more time on the customers in the industry who would buy technologies. So the AEC firms themselves, I like to try to know them and how their businesses are developing and what their needs are like. That I can see the small businesses that start sometimes, you know, virally sort of in their offices. Maybe they buy the first copy of something, and then I can get a chance to sort of discover that, if you will. And then sometimes we obviously do the normal things like trade shows and those kinds of things and go to conferences. But I think probably the big thing is we watch the customer base very carefully for the customers who could buy these products.
Watching the customer base, what would you say are some challenges or maybe some demands in the built environment right now that are causing people or may soon cause people to say, hey, we need a solution for that? What are some things that are developing now or in the near future that you can see having people?
Well, we have these kind of converging forces that we've never really had before, where we have the change in our world. And we sort of have rising sea levels affecting cities around the world. At the same time, population is growing and it's increasingly urban. I mean, a century ago, 5 or 10% of the people lived in cities. By the middle of this century, it'll be 75%. So that's a tremendous change in society. At the same time, we have all these new technologies, cloud and mobile and all, and you know, Internet of Things. And so that convergence of the demand on our infrastructure and increasing urbanization and all these new technologies really come together in a pretty exciting time for the industry, I think, where technology can really make a difference when it comes to designing, building, and improving our physical world in a much better way.
What would you say, just in general, the ecosystem, and this is more on an investing side, but what would you say just in general the ecosystem is like for tech companies in the AEC industry?
So it's not as well understood, not as vibrant, but also not as noisy as it is, for example, say in social media or social networking or some other areas. So I actually think it's great because you don't have a lot, you know, when things are going well and a space is hot, like say social media, everyone is an entrepreneur in the space. If you want to be an entrepreneur in the AEC space, you have to be kind of hard, right? You really have to work hard, and I think it sort of is a great filter, not just for us as investors, but for the entrepreneurs too. You know, you really have to have an idea, and I think the difference is that this space demands painkillers versus vitamins. You know, there's a lot of nice to have things you can get, and a lot of investors look at, and a lot of investors follow other investors, and if something's taking off, they might invest behind it. But in this case, you really have to be solving a problem for someone, for them to be able to buy a product. And if they're not going to buy products, then we can't invest in the company. So those things tie together.
What have you found to be your biggest challenge? You know, if you say you know there is a company that you're investing in, and you know that this technology is going to solve a problem. Have you, or what would be your biggest challenge as far as making sure that people within the AEC industry see this as a need?
Well, one of the big challenges, even on the entrepreneurial side, is actually building a complete company. So there's a lot of great products, but a hot product alone won't survive in the industry because of the way the nature of the business and how projects work. And you know, so one of the things that's a challenge is you really have to build a complete company. So you have to invest in sales and marketing and go-to-market positioning, and that's a skill set that's not normally found in the space. So the best teams are ones that have a mix of people from within AEC and then people from outside of AEC with certain skill sets, particularly in sales and marketing, and that combination is really difficult to get, but when you can put that team together, that's magic.
Well, that concludes our episode of Venture today. Thank you again so much for tuning in. To catch more of our Venture programming, you can subscribe to our channel, and to see what else Built Worlds is up to, go to our website. Well, we look forward to seeing you for our next episode.